Well, hello there. Welcome back to the Everyday Growth Advisors weekly webinar. This week's another fun-filled week with lots of action that's going to present itself. I'm going to start to do these webinars a little before pre-market here on Sunday nights, which is a Monday morning for most of you guys. It's Monday at 3:52 p.m. today here in Singapore, and therefore I think getting the most amount of information in and then doing these webinars, short webinars, will assist you guys to prepare on your day even more quicker and also more efficiently. So this week's going to be another week with the jam-packed economic calendar. Let's go through and run through what's about to be reported this week. So on Monday, which is today, we will have the ISM manufacturing PMI numbers. This is important. This could move the markets at around 10 a.m. Eastern time. And then at 2:20, we'll have the Fed Chair Powell speaking on the interest rate decisions and other important news which the Fed has to communicate. At this point, the Fed has already mentioned numerous times that they're going to take a slow and steady approach to guide interest rates slowly upward, and will give us ample time before that actually happens. On Tuesday, there's no notable events. On Wednesday, we have ADP non-farm employment change, and then non-manufacturing PMI, as well as crude oil inventories. On Thursday, we'll have initial jobless claims, which will be market-moving news. And then on Friday, non-farm payrolls, as well as the unemployment rate, which will be extremely important here as we get into this first quarter, second quarter expectations. GDP was reported slightly higher than expected, which is good. There's what we were expecting in line with our forecast. I did mention I expect GDP to be about 6 to 7%, which is it's on track boldly. The Fed was expecting a 6%, and we may see continued elevated GDP numbers in this coming year. Now, I did mention very importantly last week's webinar that earnings season is going to be very, very carefully guided by companies not just posting earnings, but beating expectations and issuing positive guidelines. The market is not going to take regular earnings beat at this point. Hence, you can see majority of companies who reported earnings so far kind of putting through some beat expectations and reports, but then the stocks sell off either because of profit taking, as prior to that specific earnings period, a beat was already priced in. So that's one of the reasons why stocks like Microsoft sold off on a positive beat, as you can see. And then apart from that, we have a whole bunch of really great companies reporting earnings this week. Here's a snapshot. We'll have Chegg sometime after close on Monday. iRobot. We'll have Estee Lauder before the market. Berkshire. We'll have what else? On Tuesday, CVS and Pfizer with ConocoPhillips and Ferrari. We'll have Skills on Tuesday. That's a notable one. T-Mobile, Activision, these two as well. Upwork, Zillow, Lyft, Match Group, which I think is already fully priced in. And then on Wednesday, Hilton. We have Fastly, Etsy, PayPal, Uber, Twilio, Rocket companies, Marathon Oil, Sunrun, Mercado Libre, all very important companies. Thursday, Moderna, Square, Roku, Peloton. We'll have Penn, National Gaming, Fiverr, Cloudflare, Beyond, Dropbox, GoPro, Datadog. And then finally on Friday, we'll have DraftKings, we'll have Nikola, Kronos Group. And those are the notable earnings from this week. So I think this will be another market-moving week. We may see a little bit of jitters. But I'm already hedged, and I think that it is a decent time to pick up some hedges. So I'm going to stay hedged for about a month or so. Remember, the purpose of my hedge is not to profit from it. It's just to protect myself against any downside movement in an abrupt fashion. Okay. So moving on to the technical update for the SPX and NASDAQ here across the macroeconomic backdrop, which is, so far everything has been a green light, right? Everything has been a green light. We have checks and balances from stimulative and fiscal policy, monetary policy, rising earnings, and we need to take into account here that growth rates are possibly already peaking, and the market's going to very quickly price in a overbought or a fully priced in growth rate of the market. Okay, so that's what you need to keep in the back of your head. Don't get overly bullish. This is not the time to pick up long-term positions. This is only the time to speculatively trade, scalp, day trade, anything that you see moving with momentum and volume. That's the focus of this week for me specifically, and I will go through a couple of tickers that I'm watching as well to trade this week. Okay. All right. Cool. Across the sector heat map here, you can see majority of big tech and semiconductors actually performed poorly last week. So we may be looking at a possible rotation back into these this week. Amazon, Google, Facebook, with the notable exceptions, as well as Tesla, recovering very strongly towards the end of the week. I will be looking at Tesla as a possible entry for a day trade / scalp this week, and I might go through the technicals for it in a little bit. Financials and energy outperforming the broader market last week, so expect some cool down on it. Consumer defensive might also be another rotational sector, as well as airlines and cruise lines, which is what I'm looking at this week. Specifically, if you wanted to not bother about just buying one single investment, I would say go for Jets. It's an ETF that does all airlines within it. It's been consolidating in a pennant, and I think it's due for breakout very soon as this pent-up demand starts to unfold here. Just going off the back on pent-up demand, I do believe that there's going to be a lot of market movement once the economy starts to open back up. Now there's a little bit of a scare with cases rising in India and a new variant possibly that they are expecting within the country. Cases hit almost 400,000 within a day, I think just yesterday, which my thoughts and condolences with that country. I hope that they get stuff together and take it seriously, because the rest of the world is chugging along. Okay, so let's have a look at this week's ticker of the week. Is going to be Tencent. We're going to go through Tencent a little later. A couple of tickers that I'm watching for this week. Facebook's one of them. Facebook needs to break below this kind of demand zone right here in the 325 range before moving down further. This doesn't mean that I'll take a short position below 325. It just means I want to see a break below, a retest off the 325, and then I can extend this downward to possibly play this gap fill, which is right below it. Amazon's in a similar situation. We can possibly expect this is a full Fibonacci retracement. 50% retracement seems very probable to the 200 EMA. So we're looking at a 3440 target with Amazon right there, and market just opened pre-market right now. So this is a great time to be doing the analysis. So Amazon opening up a little bit higher than usual on the pre-market here. I think it is highly possible that Amazon comes down further to test the 61.8 and then fully the 34.28, 50% full retracement in this zone right here. Seems like a very, very probabilistic range for it to come down. It has been facing a lot of bearish momentum, and so that's how I see it playing out. Futures are looking slightly bullish here with both NASDAQ and the SPX here. Futures kind of making a big move up just about 15-20 minutes ago. Seeing a potential breakout here, but we'll see if the rally can actually continue forward. NASDAQ moving into a ascending pattern here, and we'll have to see if that actually continues. And then on top of that, I'm looking at Tesla as a potential play. So let me just go through Tesla real quick. Where is my Tesla? There it is. And this one's in a very nice pennant. However, the key level of support here is going to be the $700 level. This is the level that I'm watching. A break below will signal a possible flush down to the 678s. And then if we break below the 678s, the 664s and 650s below that. Looking for Tesla to continue its upward momentum though, because I think it's more bullish than bearish. but we'll see if we can get that this week. It might end up consolidating into this pennant further and further till a breakout on either side is achieved. So I'll be watching Tesla to see on the tape if there are any big buyers or sellers to play that one to either side. Fastly also sitting on a multi-day support, hard support. This is a very strong support for Fastly and has been trading between this $63 level and the $76 level. It is reporting earnings this week, and I think there might be a possible catalyst for this to either move to the upside, or if we see a break below these key levels right here at 62, even or 60, yeah, break below 62 and a retest of 62, like this, then we maybe will take Fastly to the downside, and that will cause some extreme panic selling. Datadog also with a similar situation, but this one's still on somewhat of a uptrend, and we'll continue to monitor this one as we get further. Then we have also on top of that cryptocurrency stocks that are moving big time. Mara is one of them. This is one that I might be looking at to trade today. Marathon Digital. This one has been finding support on the 200 EMA and 150 EMA. This 200 EMA has been a very good solid support bounce here, and might be looking to make a move back up to the 56 level or so. I'll be watching for entry here today above the $41 level. That will be a possible upside, but it's already up 6% pre-market, so wouldn't want to bet too much on that. And then the last one that I wanted to go through was, well, there are two more. Teladoc, which is sitting on a very key level here, support level. If we break below this level here, it's going to go bearish, 166.66. And the last one's going to be Boeing. Those are all on my watch list. Boeing also sitting on multi-week lows here on a very, very clear support zone. So very, very difficult market to predict what's going to happen this week. I am sitting about 30% cash and ready to deploy into stocks and options, leaps specifically. I have been selling premium against my leaps and taking in some short-term gains, and that's all I have been doing in this period, holding my shares. I did let go of my Apple position, my Microsoft position in terms of shares, in the hopes of buying them back a little cheaper in the future because I got them at a pretty expensive price. I also got rid of my ARK fund, because it broke below a technical formation of a ascending pennant and might head down to the 108s, 112s, and 114s. That's what I'm looking at, as well as ARK-G, which hasn't been really trading favorably for my taste. So I got rid of those positions, and I will be looking to enter back in the near future. Okay. Great. That's all I have for you guys for this week. Remember, just stay calm. Don't need to overtrade. Don't need to do things that you don't want to do. And remember that on the back of your head, the S&P 500 dividend yield has been decreasing for almost a year now, which means that the yield is going to be very quickly overrun by a 10-year treasury, and that may cause a spike for market volatility. VIX is going to be your best friend, and if you haven't purchased any VIX options, VIX continues to be elevated at the $18 levels, and we want to see it break above the 20s, which is where it has had a solid support in the past year or so. $20 was a very key level, as you can see right here, the $20. So that's all I have for you guys this week. Have a great trading week, and I will see you next week. Specifically, whether we're going to moon or whether we're going to go to the floor is going to be a 50-50 coin flip. And therefore, I hope that this webinar kind of helps you to, specify what kinds of setups I'm looking at and the ways that I'm going to trade them. Thank you, and have a great day. Bye-bye.